Hi there. Happy spring. This is Doug Phelps with Colorado Home Realty. I pray this finds you doing well. It is amazing that we're already past the first quarter of the year, but it's time for a quarterly update on what's going on in our real estate market. There's been headlines and all sorts of glaring predictions that our market is getting ready to crash, and it simply isn't true. Not seeing any data to support that. And I want to show you 3 slides that helps to explain that. So let's go there right now. All right, so this first slide, this is showing what has taken place in the month of March this year compared to the month of March last year in 2018. And I want to draw your attention first to this upper part. This is all of the sold properties that took place in this time frame. Detached single family, attached single family, and the grand total. Now you'll see the difference between March of last year to the March of this year is just 107 homes sold. Look down here. The number of properties sold in the total first quarter last year compared to this year, 0.24%. or 24 homes difference. That is the number more that were sold last year than this year. This data is not suggesting any kind of a market shift happening. But what is interesting and that we're paying attention to is the number of homes active on the market. Detached single family, attached single family, and the total. You can see a lot more attached single-family homes have been active on the market in this month of March. Still quite a few detached single-family, so the grand total, there's 1,500 more homes on the market this March as compared to last March. Is this the shift that we've been talking about? Perhaps, but having more inventory is a good thing. All right. Let's look at the next slide. Now this one here is looking at what has taken place over the last 5 years, 2014 all the way through to 2018 and this beginning part of 2019. The red line are properties active on the market during any month in that time frame. The blue line are homes sold during that same month time frame. So take a look at what is the trends, what has happened. And as our selling season would come upon us, we'd have more properties on the market, more would get sold. New buyers would be buying them, conveying to new owners. Same kind of pattern. Look at what happened in this middle period here. Very similar, both the number of homes active on the market as well as the number of homes sold during that time frame. Very similar pattern, trending very much the same. This last year, as we went into the fall, rather than having the inventory, the number of available homes calm down, it continued going all the way into September and November before we saw it relax and come down. This compares very much to what happened in 2014 in the same stretch, the number of homes that were on the market. We did not have a crash, though. We had a cycle. Things happened. It was still good. The data suggests that we have like a month and a half of inventory currently on the market. If everything stopped at this moment in time, it would take about 45 days to sell all of the available inventory on the market. So more available homes, it's a good thing. Properties are being bought, that's a good thing. So our market is still doing well and strong. All right, last slide here in this video today. Focus first on this top chart. This is showing what appreciation has taken place over the last 4 years and a little bit into 2019, with January as the placeholder. So it's a full 12 months from January to January. So January of 2014 to the January of 2015, etc. And you can see the appreciation that was taking place in our market during this time frame. On average, about 8% throughout the stretch. So healthy things, good going on. Now, what does price depreciation look like? This is what happens in a shifting market. From 2005 to 2010, we experienced this kind of market. We had appreciation that was 6% range, and then it began to fall. We had barely any appreciation in 2007, and then in 2008, negative, 2009, even more so. And we know what happened there in the financial markets that contributed to making this happen before we began to bounce out again in 2010 and began into this process. So a shifting market, we will see this kind of thing happening, not this happening. So again, not seeing anything in our market to suggest that we are shifting away from an appreciating market. All right. I hope this has been helpful. Of course, any questions you have, comments, I'm glad to hear them. Always striving to make this information of value to you. All right. Take care. Happy spring. Dare greatly and live brilliantly today. All right. Bye now.